Jobs Act is a hot topic in our industry, in the hedge fund industry, because it presumably enables hedge funds to advertise. So let's talk about that. There are two ways of looking at this. One is, what are the hedge funds going to do about it, and what does it mean to the hedge fund industry? The large hedge funds are not going to change the way that they do business. That's just plain and simple. They want a specific kind of investor. They're not going to advertise for that investor. The very small manager, and what people, I think even the SEC didn't quite get their mind around it, at least yet, is that the small investor, the very thing that they depend on, which are exemptions, those exemptions forbid them from advertising. So the left hand is giving them the ability to advertise, and the right hand is saying, you better not advertise. So they're put in a very difficult situation. So what's left is the middle tier hedge fund manager. The one who has to be registered, which is $150 million of assets, to about $1 billion would be sort of a medium-sized hedge fund. Why is that? Well, because they're still small enough that they want to raise assets, and they are registered, so that they are not exempt. They're not relying on the exemptions that the very small managers are relying on. But putting that to the side, what it really means is that people who, like myself, who might write an article or have a website where they talk about their firm, don't have to be as concerned as they were in the past. Doing an interview on television, worried about saying something that the SEC is going to find and say, aha, you talked about performance online and you should not have done that.
But at the same time, that could make some of the real talented managers to have disadvantages of not being able to market their funds, although they're very, very good funds.
Well, the very talented managers, the small ones who will become larger, are going to have to depend on getting there through performance and through word of mouth, not advertising. The very large ones, as we mentioned, are not that interested in advertising. But yeah, I think it's going to be a level of sophistication that they have to apply to the advertisement. Maybe people who are interested in 40 Act funds, publicly traded funds, they could be interested in what the effect this has on their strategies.
And if I do recall, you've mentioned you have historically invested into venture capital.
Historically, yes.
But not anymore.
No, we do. We do. What I would say is that the universe of managers that we invest in has shrunk. I think we believe at least that it's a game. It's a kind of winner takes all. The best firms are the ones that generate the ecosystem that allows them to attract the best deals, and thus they continue to invest in the best deals. And those are the managers we try to invest with.
How do you find them?
Well, no, I mean, it's not very difficult. Those are the ones that are in the papers. I mean, the question is more, how can you access them, right?
Isn't that why this is unfair again? The marketing is maybe
yes,
it's a good marketing.
well, yes. I mean, they've done a good job of marketing themselves beyond the SEC. I would say that these are known suspects. You know who they are. I think that the difficult thing is getting access to these managers. Many of them, we've been lucky enough that we have gotten access to them, and they continue to perform pretty well for us.
So therefore, you guys have been sticking with mid-market buyout.
I would say our allocation is more biased towards the middle market in the U.S. and Latin America to some extent, but it's more biased there. We think that's where we can achieve the outsized above normal returns.